My name is Theo Argitis. I'm the team leader for Canadian Economic and Government News at Bloomberg News. And this panel will be all about provincial borrowing and provincial government financing. With us is Don Delise, who is Director of Capital Markets at the Treasury Division for the province of Manitoba. And we also have Lowell, who is Assistant Deputy Minister at the Treasury Department for the province of Alberta. Hello.
Good afternoon.
So it's been an interesting year, right, to say the least, for people who sell government debt. Lots of debt to sell, lots of uncertainty, just a lot of market dislocation in March and April. I thought before we get into a discussion about maybe some of the borrowing issues, maybe some of the funding requirement issues, some of the issues around your economies, maybe I'm just to give us a bit of a flavor of how crazy was March and April for people in your line of work. Just give us a flavor of what you went through, what were the challenges, what were the most interesting things that happened to you in those weeks when the markets really did dislocate. Don, maybe start with you. Yeah.
Well, I was going to say it seems like so long ago now, but I mean, it really did feel like a fire drill at the time. Markets were basically completely dislocated, didn't know, they really weren't functioning properly. So ourselves at Manitoba and many of the other provinces basically looked at the market and went from what we would usually do a publicly distributed bond to significantly more private placements with some of the larger investors that actually reached out to us to say, would you be doing something? Because they had cash to put to work. But as far as a granular publicly distributed bond, it was next to impossible for the longest time. So a lot of us were incredibly busy. And I mean, if you were to talk to any of the dealers, I think they would say during that period, it was record amounts of borrowing just because we all wanted to get money into the door and because we didn't know what the future was going to bring with respect to the market capacity.
And where did you find these investors? What did you do differently? How did you go about, looking under what rocks to find these investors?
Go ahead, Lowell. So,
and Don was very accurate. We saw the same thing. We found the investors through the various dealers we have, both domestically and internationally, and they would identify potential deals, and we would do them. We did something like 16 in the last 2 weeks of March alone. And we were printing them as fast as we could find them.
And largely you raised what you were hoping to raise that time. Did things work out as well as you could have expected? And how much did the Bank of Canada entering both the provincial money markets and then the bond markets kind of stabilize things for you?
Well, I think my view is the Bank of Canada did a very good job. I mean, where we noticed the big difference was on the short term. We have a weekly Treasury bill auction that our spreads went through the roof at that point. And when the Bank of Canada stepped in to bring the support in for those short-term markets, we found that we went back to pre-COVID levels relatively quickly over the course of a number of weeks, which I don't know whether that would have happened had they not stepped in.
Lowell, in your case?
Well, we were able to raise what we wanted. There was lots of worry about how much cash would be available. That was certainly the case, but we were able to meet all our needs and start building some cash reserves.
Okay, so
we're carrying. Well, we were exactly the same way. We actually got farther ahead then because we were trying to get as much in as we could because of the uncertainty that we were able to manage on a go-forward basis after that quite easily.
Okay. So why don't we go through some numbers then? Okay, how much? Let's work maybe with the fiscal years and work with the current fiscal year. How much do you anticipate your funding requirements will be for the current fiscal year, and how far are you in that borrowing?
So, province of Alberta has issued 18 billion since April 1st, and our total borrowing requirements for this year is in the range of 29 billion.
So ours are significantly less than that. We had budgeted for the current year just 5.65 billion, but increased the revised requirements to 7.8 billion because of the uncertainties. Obviously, went from what we thought was going to be pretty close to a balanced budget to a deficit for the current year. So we are right now, we've raised 6.9 billion, which is about 82% of our requirements for the year, and that includes being $1 billion pre-funded going into 21-22.
Okay, so Don, does that mean that it's going to be a light 6 months for you when it comes to borrowing? So what does that mean for your borrowing going forward at this point?
I think what it means is we are about 6 months ahead on our cash position right now, and our anticipation is we intend to keep it that way while the uncertainty is there. So is it going to be a busy last half of the year? No, but it'll be steady. And again, we'll focus on domestic benchmarks.
And Lowell, you've got a little bit more issuance to do.
Yes.
What's your strategy going forward for the next 6 months of the current fiscal year?
We typically hold 3 months cash, plus we have a $4 billion cash reserve, which thankfully we didn't have to touch. And so we will be busy because we pre-fund 3 months, which roughly, divide 29 by 3 and you get somewhere around 9 or 10. No, I can't do math, 8 per quarter. So right now we're, like Don said, we're being very cautious. And, the one thing we can't do is run out of.
I mean, for you, Lowell, it's a bit of a tougher story to tell. You've got the province is running larger deficits. It's been hit by this, double whammy: the pandemic and falling commodity prices. What is the story you're telling investors as you make a pitch for why? Alberta government debt is still, a good investment to make.
Well, despite our trouble, we still have a very strong balance sheet. It compares to the best in Canada. Our debt to GDP ratio, net debt to GDP ratio, I should say, is projected to be 22% at the end of this fiscal year, which is substantially lower than a number of provinces. So that's one thing. Sorry, I lost my train of thought. We are also, so we're emphasizing that the province's balance sheet is strong. We're also trying to look at other factors. Oil is still very, very valuable. We still produce 3 million barrels a day or more, and similar amount of cubic feet of natural gas. Those do have value. And will have more value when the Trans Mountain Pipeline opens. So
and I guess this is a question for both of you. What are investors asking when you're talking to them and you're making your pitches? Are they worried about balancing the budget? Are they worried about economic prospects? Are they asking you kind of like a time frame from when, over which you'll be able to, bring some fiscal discipline back? What is in your opinion, what is the issue that investors care about most right now?
Well, I think from our side, conversations with investors revolve around, and unfortunately, it got lost in the COVID, but our government for the fiscal year ended March 31st, 2020, which the public accounts just came out at the end of September, balanced the budget for the first time in, I don't know, probably 15 years. And as a result, that kind of got lost in the shuffle. That is recognized by both the rating agencies as well as the investors we've talked to. The toughest question to answer that we're getting is, what are you seeing on a go-forward basis? When do you think you could balance again? What do you think is going to happen with the economy next year? On the balance again, the current government said in their throne speech this past week, said they would come out and try and balance within 2 terms within 2 terms from now. To be honest, they said that during the election in 2016, and they did it within 4 years because they were very focused. So I think there's an understanding there that the government is focused on fiscal prudence. However, having said that, there is no question that the uncertainty right now with respect to COVID, how quickly the economy is going to recover, whether that's provincially, domestically, or globally, is a real question mark right now.
And Lowell, what question are investors asking you right now? What's the kind of one of the main things that is of interest to them?
Well, not too much different than Don. Of course, they're looking at not just our fiscal forecast, but our revenue numbers from oil royalties, and all the associated businesses. Being hit harder, we're less certain of what it looks like going forward, I would say. But, they're asking the right questions. What's the economy look like? What's the fiscal situation? When are you going to balance? Those sorts of things. Our balance within not this term, but the next term.
Now, obviously, the Bank of Canada has stepped in a big way to help out the provinces to manage some of this debt issuance, both on the money market side and on the bond purchases side. I think if I saw the numbers, I have them somewhere here on my laptop. It's in Manitoba's case, maybe $600-700 million worth of bond purchases, a little bit more for Alberta. How are they doing? What would you tell, if you could tell Bank of Canada officials to do any differently if you could have that conversation with them?
I'm not sure I would tell them any differently. Like I said, I think one of the ones that seemed to work very quickly was the short-term program that they put in place. It certainly had a positive effect fairly quickly on our Treasury bills. And when you compare them to the rest of short-term debt for the provinces, I think they did a really good job. On the long-term purchase program, again, got a hats off to them for stepping in. I would say that the market is got some sort of normalcy back to it now, and has had for a number of months. So I think, until such time as there's some sort of dislocation again, I think it's probably great that they're going ahead with it, but probably not needed now to the same extent it was during March, April, and when all the concerns were there. I mean, I don't know, Lowell, what do you think?
I would agree with you on all points. I guess one of the questions being, if there's a big second wave, not a small one, how much ammunition is left? That's a question that no one can answer. Too many variables.
So if we do see a big second wave, or if we do see a second wave plus another kind of sharp slowdown in the economy, do you think that we're going to see the sort of market dislocation in the funding markets like we saw in March and April, or have things stabilized enough in financial markets where you don't think it's going to be a problem for you if we do have another downturn like the one, or something similar to the one that we had earlier this year?
Well, my first reaction is never say never. So we didn't expect the last one. So we don't know what to expect on the next one. My opinion is that the markets have normalized to a certain degree. We're starting to live with COVID and learning to live with that, and that's more stable markets. And
Yeah,
so we're not.
I agree with Lowell. Yeah, I agree with Lowell. I think that the difference is it won't catch people by as much a surprise. I think they're as Lowell said, they're learning to live, within the COVID pandemic. I think, or in the environment. I think for somebody like us, I mean, we are certainly wouldn't be in the same hurry up offense that we would have been before because we're in much better liquidity now than we were back then. I mean, we were always trying to stay liquid by 3 months. But at that point in time, we had no idea what to expect in the future. So we're now 6 months ahead, and we'll stay that way until there's some certainty in the market.
Have you seen any change in your investor base over the last 6 or 7 months? Since the crisis and since the recovery, has there been any discernible change in who is buying your bonds or your debt? Lowell?
We haven't seen a dramatic change. Certainly, it's the same set of investors when we've done deals where we can identify them. It's the same mix, very strong interest in Alberta debt internationally. And I haven't seen any trends. There are a few that are stepping out, but that always happens. That's what a market is.
Yeah, I would agree. When we look at our distribution schedules, they're very similar to what they used to be. And I'm taking away that March, April timeframe where we were doing all these privates. But now that we're really getting decent public distribution again, it's not that dissimilar.
And on duration, are you doing anything different around duration at this time?
We are not. Domestically, we certainly tend to look at the benchmarks, 5, 10s, and long. A big part of our program, we do borrow on behalf of Manitoba Hydro, and given the nature of their assets, we certainly probably focus on 10s and longs for them, more than other parts of the curve. We'll try and get into the U.S. market, at least one global issue a year. That is kind of our it's a market we want to continue to keep a presence in. So that one might be down the curve. We've tried to keep a 5-year bucket in our maturity schedule to be able to take advantage of that because 10-year isn't always there in that market. So I think it'll be that kind of ongoing process.
Hello?
In Alberta, we haven't changed our preference for long debt, but to a certain degree, we have to take what the markets are providing. And, long bond interest comes and goes. We've been fortunate enough to do a couple of ultra long bonds for about $800 million in total. So that's helped us a little bit, not much, to extend duration. We would prefer to extend duration, but if the market's not there, we still have to borrow.
I see we're running out of time, so I've got time for one more question, and this conversation about duration is actually a great segue to that. The federal government, which has stepped up in a big way to fight, to respond, let's say, to this crisis, in many ways helping out the provinces in that way, has said that it is planning to move out on a long duration, longer in duration out on the yield curve to finance its very, very large deficits going forward. That's usually kind of the domain that the provinces like to play in. Do you think that's going to pose any additional challenges for you if you start competing with the federal government on the long end of Canadian bond sales? John?
We at the province haven't seen that yet, and not really anticipating. We don't have the same size of borrowing program as others, but I really do believe that given the communication between how all the provinces talk and speak on timing, so we don't bump into each other, that same kind of communication. I mean, the Bank of Canada is very transparent with when they're coming to the market, so it'll be up to us to be a little bit nimble and find the windows that we need.
Well,
Well, I would add that, you know, investors don't get opportunity to buy longs very often. And so when there is an opportunity, we try to take advantage of it. Our bonds are still, any province's bonds are still attractive versus Government of Canada because there is a substantial yield differential.